What's going on, guys? Welcome back to another video. So in this one, we're going to be talking a little bit about AMC right now, a little bit of the technicals, because this is definitely not what a lot of us wanted to see today, but it played out pretty closely to exactly everything that we have been saying on this channel over the last couple of weeks. Now, in addition to this, we're going to be taking a little bit of a look in the Ortex data as well, the options data going into the end of this week, because it is a monthly options expiration period. And then we're going to get into some of these large institutions that are supposedly taking multi-billion-dollar losses here. So one of them at the high end could be taking a $174 billion loss, but I kind of want to break this down to you guys and go over what is actually realistic and the truth behind some of these situations and the numbers that you guys are seeing kind of spread around social media here. And we also have a special announcement for you guys, so make sure you guys stay tuned for that. So before we get into all of this information, if you do enjoy the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So let's get right into the charts here and take a look at what AMC is looking like on this 4-hour time frame. So when we're looking at this right here, we have gotten this clean break of the 13 EMA on the 4-hour time frame. The 13 is now coming down to approach the 48. The RSI is also below its moving average, below 50, and we are seeing the MACD building that bearish momentum as well. So what we've been saying on this channel recently is we have to watch for these breaks of the 13 EMA. If we do end up breaking down and selling down hard, the first downside target is obviously going to be this 48 EMA right here, right around $22.03. Now we're below that right now at the current time that I'm recording, and if we do end up closing down below this 48 EMA, it would not be out of the question that this next target down here, $20.71, is in the picture. So again, this isn't necessarily a video to scare anybody, or this part of the technical part of the video to actually like scare you or create any fear. This is the realistic expectation on what the charts are saying at this given time. Can we end up rallying back up and touching this 13 EMA again and trying to make that attempt to the upside? Yes, we absolutely can. AMC is incredibly volatile and kind of likes to do whatever it wants at any given time, especially with all the craziness we've seen in the market recently. But again, that's kind of what those downside targets are looking like right now. In order to kind of regain a little bit of bullish momentum, we need the RSI above 50, above its moving average, a nice MACD cross back to the upside, and it'd be great for the shaft trend cycle to signal buy as well. And again, we really want to be getting over that $23.86 mark, that 13 EMA on this 4-hour time frame right now. Now, let's kind of get into this little special announcement before we kind of go into the short interest data, the options data, and what's going on with these funds. So again, guys, the team and I have been really working really hard to present to retail a trading algorithm to basically give retail the ability to trade in the same way that these large institutions that are manipulating these stocks every single day trade exactly like them. Now, again, about 80% of the overall market right now is controlled by algorithms, and I want to show you guys a little bit of the results of the algorithm that we have just released today. Looking at this one right here, this is Pythagoras. So he is trading shares on the daily time frame, and he's absolutely crushing it right now. He started at 100,000. He's at around 140,000 right now, about 40% in the first month, just trading shares alone. This algorithm is absolutely nasty, and if you guys are interested in learning a little bit more about how you can get access to this algorithm, along with Invictus, our new predictive bot that alerts on the 5-minute, all the private live streams, all the learning curriculum videos, all of the normal 1348 alerts too, make sure you check out that link down below, guys. If you are interested in joining the best place to come and learn how to trade, you know where to find us. So kind of getting into the other things that we need to talk about here with the Ortex data, let me just give this a little bit of a quick refresh. 18.41% estimated short interest. Again, it's just giving us that bare baseline minimum of what potentially is the actual short interest out there right now. Average cost to borrow, 8.42%. And we've got about 136 million shares on loan. That's kind of what we're looking at here on the on the short interest data. Now, coming over and taking a brief look at the options chain, it's pretty even. There's nothing too crazy going on. We have 54,000 calls in the money with about 28,000 puts. Again, we're probably not going to see any large price movements just based on the option chain. We would need at least 100,000 calls in the money to really see any significant difference, or that's basically what's happened in the past with what we're looking at with the options data here. Now, let's get into a couple of these funds, the big losses that they are taking, and some of the numbers that are being thrown around on social media right now. So this first fund right here, Susquehanna, everybody's very familiar with this institution here. And you can see here, prior market value about 578 billion. Market value now, well, 404 billion. Well, that would suggest that they took potentially a loss of $174 billion in the last quarter. Now, when we take a look at this fund right here, Tiger Global Management, a fund that we've been talking about a lot, it looks like their fund got basically cut in half, 26 billion right here, prior market value, and the current market value, 11.9 billion here. So just looking at the market value of the assets that these institutions are holding, it would appear as if that they are taking just gargantuan losses here. Now, while they're most likely taking pretty significant losses, the loss size may not actually be as big as a lot of you guys actually think. And we actually have to go into how essentially these asset under management numbers or market value numbers are actually calculated. Now, when we come over to Fintel here, we're going to use Citadel as an example. So Citadel right now, portfolio value 389 billion here. Now, again, Citadel, it shows that they had taken a significant loss too, but Citadel Advisors LLC has disclosed 12,751 total holdings in their latest SEC filings. Portfolio managers are listed as Ken Griffin. Most recent portfolio value, this is important, is calculated to be this 389 billion number. Actual assets under management is this value that you're seeing here plus cash, which is not disclosed. So when you think about the overall market environment right now and what a lot of these big money players are doing, yeah, they're obviously taking losses. We're seeing it in the news every single day, but if they're selling off positions, taking a loss and moving that money into cash, it's not necessarily them booking a loss on that position. It's going to appear on some of these numbers that that total position is actually going to zero if it's all being moved into cash and not being put into another asset. So again, if they are taking significant losses, which they most likely are with the overall market conditions, and we've seen a lot of these funds in the past kind of come out and say, well, we really weren't able to read these market conditions and reposition our portfolios accordingly, then this is kind of the results of what we're seeing here. So again, kind of taking a look back at these numbers here, this $174 billion loss. Yeah, Susquehanna's probably taking significant losses here. Same thing with Tiger Global, same thing with Citadel, same thing with a lot of these other institutions, but you have to keep in mind that these numbers that we are seeing and what we are actually reported are not really going to be entirely accurate. And you have to also think about if they are moving their portfolios into cash, or some percentage of their portfolio into cash, well, how is that actually going to affect the numbers that we are seeing on a quarter by quarter basis? So guys, that is going to wrap up this update on AMC. And essentially what's going on with these funds over here. If you guys did enjoy the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys do want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. So other than that, guys, I hope you guys have a great evening. Peace.